Welcome to Real Life in Real Estate. Today, my special guest is Josh Johson. Josh and I have had a lot of history together, both personal and professional, and I think you guys should get to know him. So Josh is a lender at Cross Country Mortgage. Oh, good. Cross Country Mortgage.
You got it.
I knew it was CCM, but
yes, that's like the running sport. Yeah.
Oh, good. Yes. So get to know Josh today. The reason I like to have lenders on the podcast is so that you get a preview of what they do and you start getting the idea of who might serve you best and who you would like to work with, because lenders and agents need to be your best friend for a couple of months. You have to like who you work with. It's really important, and you need to trust them more than anything. So, welcome, Josh.
Thank you, Nikki, for having me.
Yeah.
I'm so excited to be here. And what you said there, I really think couldn't be more true. You're working closely with your agent or your lender for usually a couple or a few months, depending how quickly you find a house. And you want to have someone that is in your corner that you feel like you can actually get along with. That's really important.
Yeah.
You'll have a much, much better process that way.
Right? It's kind of like real estate bestie and lender bestie, because we're the people who are going to be texting you the most for a little while.
Yes, exactly. Yes.
All the emails are from us. Yeah.
Yes. I know. I just made a phone call to someone this morning because we were coming out of underwriting. The underwriters just had one more question before we got to submit back for clear to close. And it was great because these are people where I wanted to try to get it done early, so I called them about 8:45, so it was a few minutes before 9, but they were very pleasant and happy to answer the phone, but I think it helps because they can handle me, so that's good.
Yes, that is good, and it's good that
we get along.
Knew that their working hours, they would be okay with that, and they weren't on night shift, and that's the middle of the night for them, and so important.
Yes, very important.
So important. Well, to give the listeners a catch up, Josh and I used to teach first-time homebuyer classes together. We actually spent several hours in this room, several times, doing Zoom first-time homebuyer classes. So for first-time homebuyers, I know Josh is well versed in how to get you into a home with the least amount of money out of pocket.
Yeah.
But I know that's just one level of what you do. So can you tell us more about some of your favorite things that you can offer as a lender?
Yeah, of course. So yeah, I mean, speaking to first-time home buyers, I mean, right there for me, that's just, it's been a niche that I think I kind of fell into when I very first got started in the mortgage business. I didn't know that would become a niche that I would end up loving, but things just fell into place that way. Of course, getting started, just trying to meet people, teaching first-time home buying classes. Like I said, a lot of those with you was my chance to really start to actually meet people out there and have the chance to serve and help people. And the people that were coming to those classes were first-time home buyers. So that still to this day is a transaction that I love to be a part of. I just think that there's so much exciting and invigorating opportunity to be able to take someone that maybe this whole process just feels like a big cloud that they can't see through and they don't know where to take their first step, and getting to kind of part those a little bit and guide them through is a really rewarding feeling. So I love that. But outside of that, I mean, we have a lot of different products that we can do at Cross Country. We have everything from loan programs that maybe a lot of people have heard of before, like your conventional FHA and VA and USD loans, and then we have all these different other smaller broker programs and even our own niche programs that we have too. I'll highlight one for you.
Yeah, what's good?
Here's one that I think is really cool that many people don't know about. This is for maybe anyone, let's say you're listening to this and doing real estate investing is a goal that you have. Maybe also, if we want to kind of drill that down more, maybe you're somebody who wants to be an investor or is actively investing in real estate, and maybe as far as tax returns go and how you maybe do certain write-offs or just the way that you structure your taxes, maybe for whatever reason, if you've tried to go and apply for, say, a traditional conventional mortgage to buy an investment property, if there was any issue there in terms of the income we could use, there's a loan program that's called a DSCR.
Thank you.
Loan.
Yes.
I want to bring this one up again.
Thank
because
you.
I think this is a good one. Did you remember?
I remembered it from.
Okay,
yes.
impressive. Okay, I was gonna say I know it's kind of like a acronym. We're like, what is that?
Yeah, I don't know what it stands for.
Yes, it stands for Debt Service Coverage Ratio.
Okay.
Is what it stands for, which is still like, well, that still doesn't help me understand what it is.
Yeah, I still don't know what to do.
So what the program is it's for purchasing investment properties, residential real estate, so 1 to 4 units, and you qualify for the loan based off of if the rent that will be received from that investment property will exceed whatever the monthly mortgage payment is by at least $1, then you qualify for it.
Oh my gosh.
So this means, in other words, we don't have to get a bunch of pay stubs and W-2s from you. We don't have to critically analyze your tax returns and kind of qualify your income based off traditional means that we normally would with a mortgage. It's really the focus is on, okay, what's the mortgage payment based off the down payment you're bringing, and then what's the rent that's going to come in, and just making sure that the rent exceeds the mortgage.
So this is an amazing opportunity for parents who have equity in their house, and they have young adults or whatever adults, doesn't really matter, old or younger. They have a family member that maybe needs help getting into their own place, and that way their family member can be in their investment property.
Yeah.
And, you work out the rent yourself.
Yeah.
Oh my gosh, because there's so many people who are stuck in that in-between of I can't afford when my income isn't 3 times the rent.
Yeah.
And they're stuck in between. My income is only 2.5 times the rent, and rent keeps going up, but incomes aren't going up.
Yeah.
This way, someone else could look at this rental property as more of almost a nonprofit, or just giving a hand up, especially to a loved one or a family member, and then take care of them. That's incredible.
Definitely. And I actually really like that spin on it of family being able to help family, like maybe a child or something like that. And it also can be really handy for those people who are maybe it's one of you that are listening to this who are self-employed, and you're trying to limit the tax burden that you have each year. This can be a workaround to maybe navigating around any sort of potential issue where if you've tried to qualify again for a loan before and for whatever reason they couldn't do it based off of the way that certain deductions were laid out, so on and so forth. We won't get too into the weeds, of course, but this can be that potential workaround if someone wants to do some real estate investing.
Oh my gosh.
Yeah.
That's incredible.
Yeah.
So glad you brought that up again.
Yes, of course.
And we're saying again because we did record this once before, a couple weeks ago.
Yes.
And we had technical difficulties, so we're doing it again, but also doing it without notes. And so we're still spontaneously sharing things that we think are important. So thanks for that.
Yes, of course.
So why did you get into lending anyway?
Yeah.
From the beginning.
So we go back to the beginning. So I come out of college. I was working at Nordstrom's at the time up in downtown Seattle. And retail sales, customer service was really all my work experience had been. And I'm still kind of doing that now, right? And that customer service, working with people. So that's just been my whole career. But I didn't like commuting up to Seattle all the time because me and my family live here in Tacoma, and I wanted a little change of pace. So I actually started to apply for jobs, and I got about 3 or 4 interviews into a job with an insurance company, and it was going to be kind of a business-to-business insurance, and I get so far into the interview process. I haven't shared this with you before.
No, I've never heard this.
That I was so confident, like, I'm going to get this job. It's in the bag. Yeah. And then I actually put in my 2-week notice at Nordstrom. Don't do that. On this move, because then guess what happened? I didn't get the job. So now I didn't have anything. So I actually started working at a local credit union here in the area as a teller. And from there, I started to do credit cards and then car loans and then home equity lines of credit and second mortgages, and then jumped into kind of the full, So as far as the answer to why I got into it, it honestly just kind of fell in my lap. But what I really quickly learned, and this also ties back to my experience buying a home, was that I always wished that the mortgage industry, frankly, did a better job at explaining things and kind of showing people their options. Because I feel like my experience was I went and I got pre-approved because everyone told me that, right? And that's true. That is actually, this should be one of your first steps.
Go get pre-approved.
Go get pre-approved. Really, really important. Yeah, don't skip that. But so I did that, and then they gave me a pre-approval letter, and that was kind of about it. They might have maybe told me something about what the payment would be. I don't even think I really knew what closing costs were, and then I went out and shopped, and then you go under contract to a home, and that's when you get all these disclosures from the lender.
Then they tell you all the things.
Then they give you everything.
And most of them you don't understand anyway, even if you've taken a good class.
Yeah.
We can never cover all of it.
Yeah,
It's so technical.
It's really technical, and even I find, and because I was there too when I went through it for the first time, I find that a lot of people don't actually know what it means to get the best deal. A lot of people are under the impression that the best rate is the best mortgage.
Not always.
When you don't know, what's behind it. I mean, there's been times where I've helped somebody, and maybe another lender says, "Oh, well, come over here. We have this rate," and then I'm like, "Oh, did they get you a loan estimate?" "Oh, no, I didn't get one." Did they tell you how many points you're paying, which is an additional they're called discount points, or additional fee you pay at closing in exchange for a discount on your rate. Hence why they're called discount points. But get me a loan estimate and send it over to me, and that way I can at least take a look at it and see. And there's been times where I get that sent over, and somebody doesn't know that they're getting charged $10,000 or $15,000 for that lower rate. So just little things like that. So anyway, I got into it, and I was like, the mortgage business needs to do a better job at being more transparent, and that's really the experience that I try to bring. So and that comes down from pre-approval is a big stage for me, where I like to go really in depth with people, where once they get pre-approved, I actually like to schedule a meeting with them, either in person or over Zoom, and actually walk through all the numbers. So that way, before they even go shop for a house, they already are more confident and informed with what everything looks like.
Yeah, so by creating a strong buyer, an educated buyer, then they're able to walk into multiple properties with their agent and have their numbers in their head and ready. The payment will look like this, the payment will look like this, the payment will look like this.
Yeah.
And that, I know that helps me as an agent talk with buyers. So could you tell me more about creating strong buyers through education and how that plays out because it does make a really big difference.
It makes a big difference, there's this saying that I heard actually from another lender where he said, confident buyers make confident offers. And I liked that a lot.
I do too.
And I think it's true. Like one example, and also to answer your question too, could be, okay, what if it's a competitive situation and maybe someone needs to offer over the list price? It depending on if somebody's in the shoes of the buyer and they know that maybe they need to pay, let's just say $15,000 maybe over the list price is a competitive enough offer if there's other competition to where maybe in that specific scenario, if there was a couple other offers, maybe they could win it if they did that. Obviously we're talking very, very general. People like you are then amazing agents get to help somebody figure out is this a competitive situation? Is it not? What's the listing agent saying? The other kind of offers they're getting. So there's so much that goes into it, right? But just for the sake of example, let's say that's what could do it to help somebody win. If you're in the shoes of the buyer and you hear offering $15,000 more, then that sounds like a lot bigger of a hit than would you be comfortable paying an extra $45 on your monthly payment?
Right.
It's just
huge
difference. The way that it's switched, the mentality behind that is very, very different. So that confidence can come in, I think, in again, just helping someone see the numbers. So there's somebody over the weekend was making an offer on a home, and they were considering offering over. I just jumped into the numbers that I'd already sent over to them, but updated them to go up to what they might need to offer to win it, and the payment really wasn't that different. They're like, "Oh, yeah, okay, yeah, we could actually do that."
Yes.
So then they revised their offer and they won the home. So I
Yeah.
think that's kind of where that confidence piece comes in, which is really like, you know, the team that you have around you on the real estate and the mortgage side, finding people that you feel like really want to educate you and help guide you through it. And that will make you more confident, which usually will make you more successful out there.
I think people who are working with lenders that care more about let's get the right house for you, and not let's get a house.
Yeah.
The right house for you, the right payment for you is incredibly important. I think it's even more important with these higher interest rates that we're experiencing right now.
Yeah.
When we swing back into a lower interest rate season someday, then it will be more about the house than the payment.
Yeah.
But right now, this payment has to work.
Yeah.
I encountered someone recently that said, yeah, but, and they hearkened back to the early 2000s when we had adjustable rates everywhere and every year our mortgage changed and you didn't really know what was going to happen. Like, hold on. Things have changed since then. It's more for every lender I know and every agent I know, we care a lot about you being able to afford your house. I think because some of us were homeowners then, or some of us were lending then, and some of us have close personal experience with, I've seen people not afford their house, and we're not comfortable putting you in that situation. The sale isn't worth it. The commission isn't worth it. I need you to be happy in your house. I want you to be here for 5, 10, 20 years. I don't care if you never use me again. If you have the right house with the right payment.
So is that something that, like, when you're out showing buyers homes, that's a part of the questions that you'll ask and just scenarios that you'll walk somebody through to really help them decide if a house is a good fit for them or not?
Yeah, because it's not just about your square footage in your rooms, but you have to be comfortable with that payment.
I'm curious to ask, because of course, being a lender, I don't get to actually step foot and do a lot of
I know we should
houses.
go do a house tour.
I know, yes, I know. It's funny. I actually enjoy whenever I do get to actually make it out and just go to a few open houses, because I'm usually behind a desk in the office, because that's where I'm reviewing applications. But when you... I've always wanted to ask this question. How good of a gauge do you think you can have sometimes when you walk with, let's say, a buyer into a house that you're showing to them? When they first walk into the home, just their initial reactions, is it usually pretty obvious if it's going to be one that ends up being... No, okay. so it's not like initial reaction, because that's just seeing the surface, but then you go through everything. Okay.
I can usually tell by how long they stay.
Okay.
Because if they walk in and they're like, wow, but we only stay for 5 minutes or 10 minutes, 15 minutes is usually about, okay, we're done. There was something in the house, either the layout, and I can't feel the layout for them. They know what is not working in their house, and so they know that unique feature that will give them more peace in the next house. So... I mean, I use myself as an example so that I don't share other people's stories without their permission. But for myself, it was finding a home that had a door on the family room. You can show me square footage and you can tell me numbers, but I wanted a door on the family room, so there was a living room and a family room with a door on it, so that my teenagers can do their games and their friends, and I can go read a book somewhere else. So...
I like that.
Right, so that's my story, but every buyer has that one thing of, it's the yard for the dog. It's garden space. This has a nice circular flow so that it works for entertaining my entire extended family. And you start seeing the light bulbs come on in their face the longer you stay. But if it's not happening in the first 15 minutes, then you know.
Yeah. Interesting. Okay, that makes complete sense to me. The longer someone stays, you can just know, that they're thinking about it more and maybe trying to make sense in their head. Gosh, is this the one? Is it isn't? Let me just go look at that bathroom one more time.
And then it's you see them start imagining their scenarios of holidays or birthday gatherings, or maybe they've got a graduation coming up, or a backyard wedding, or whatever stage of life they're in. They start to imagine what it looks like here. And that's why I schedule showings for half an hour, but sometimes we're only there for 5 minutes. But I don't know, which house are we going to need a full half hour? There's people who come and visit open houses and don't leave. And you better put in an offer. Okay, just call your agent while you're here, because you're still here.
I've heard stories, yes, of people staying past there a lot of time because they're just really they're
really into it.
They're having a ball exploring.
Yes, yes. And luckily the market isn't so busy that we're having overlapping showings.
Yeah.
Not a lot anyway, but yeah, it's still like that. People at open houses they're talking away, especially when they've brought a family member or their significant other, so they have someone to talk to, talk through it. But gotten kind of off track there.
Yeah.
You should come.
Yes, no, I should. And I think it's great when people go out and see open houses, like even early on after someone's pre-approved.
Yeah.
You know, I always love it when buyers actually go out and see homes like that weekend after they get pre-approved.
Oh, yeah.
Even if they don't necessarily plan to buy for maybe another, 1 or 2 months, maybe even 3 months after they get pre-approved. Because I think it's just a great exercise. And I always tell people, go out, just step foot into a couple houses, get your feet wet. It'll kind of, you'll get to understand what the shopping process feels like, because I will say, for anyone that's listening to this, and maybe if let's say you haven't bought a home before, but maybe you've just popped into a couple open houses just to look around. Yeah. It is a different feeling when you step into an open house for the first time, when you know that you could actually put an offer on it and buy it.
Yes.
It feels different. Yeah, it feels different. You start to think about things differently and look at different things. Yeah.
What do you think is the threshold for first-time home buyers getting approved for a realistic FHA home? To me, that threshold seems to be about $350,000, which seems to be around $30 an hour at a job. And you see numbers more than I do, so I'm just guessing on the job side. But I know in Tacoma, most of our first-time homebuyer FHA good houses, they're solid and they don't require a ton of work, and they're still going to appraise and be okay. Yeah. Right around $350.
Yeah.
What do you think?
So I depending on, definitely one variable is how much other debts do they have, like car payments, things like that. But I would say threshold. It can be easiest, and I'll say this, and maybe we cut this part out.
We'll
but I'll tell you what I think is maybe the most realistic answer, which is, regardless if it's one person on the application or 2 people on the application, with rates maybe around the 7s, being around the 6-figure mark, I think is realistic. I think that's realistic because if you're around the 6-figure mark, like let's say 100,000, you're making, what's the math on that? About $8,800 a month, something like that. I have to pull up my calculator to get the exact amount, but let's say you're around there. Let's say you're making $9,000 a month. If we take that debt to income ratio calculation into perspective, where we know, okay, we can usually go up to about a 50% of your income. 50% of that is, $4,500 a month. Yeah. So maybe depending on how many, if someone has a $300-$400 car payment and maybe a couple student loans, then we do get down into the threes. But that could still get you a home if you're doing very, very minimal down. Maybe $350,000 to $400,000, depending on what the taxes are. Okay. So
you're seeing similar numbers. Yeah. Or at least you're thinking it through and coming up with similar numbers.
Yes. But what I will say is that there's a lot of even for those that maybe for any reason, maybe budgets, we're talking about budget and income, maybe can't qualify right now. I've seen more people getting co-signers. Like there's actually one where he's a first-time home buyer, and his mom and dad are co-signers, and he's going to close this week. And then when rates drop, he'll just refinance.
Into his own name.
Exactly.
So that's a really good thing we haven't ever talked about on this podcast is having a co-signer. What are some pros and cons, especially in this current economy? And most people are working 2 jobs, and most people can't add a third in order to get over the hump of our debt to income ratio, or just being able to put more down. So what are some pros and cons of having a co-signer? Asking a parent, a relative, it's usually someone who's related, right?
Usually it's someone that's related. It doesn't have to be,
Okay.
but for most programs, it's the easiest if they are related. But
We
yeah.
can't just all go out and ask some millionaire that we know.
I mean, that would be nice, wouldn't it? Just be like, hey, before you know it, this millionaire they're co-signed for 20 different loans. I'm just
That would probably be bad.
yes. But yes, as far as co-signers, those are definitely making a big difference.
Okay.
Today in this market, if somebody budget-wise maybe can't qualify on their own, because if they are a qualifying co-signer, we're really treating them in terms of underwriting them just like we would, the actual, primary borrower.
Okay. Yeah.
So we look at credit, income, assets, and as long as they, qualify by all the traditional criteria, and they have, so in other words, they have income we can verify,
Yeah.
their credit score requirements, line up with what the requirements are for that loan, then that can really help allow someone to qualify for maybe their first home, or just increase their budget to maybe get up if there's a certain target they want to get to but can't get on their own.
Yeah.
And then using that opportunity to then refinance from there. If maybe right now with rates, as we record this, rates are, right just over 7%. So maybe someone right now needs that help, but then when rates go back down at some point in the future to, let's say, down into the 5s, they can probably refinance and potentially at that point qualify their own, take the co-signers off. So now those co-signers, let's say it's mom and dad, their name isn't on that loan anymore, so it's not reporting on their credit anymore, and they get to go off, and now they've got the mortgage just under their name.
Excellent.
Yeah.
Excellent.
Yeah.
Thank you for indulging me.
Yes, and as far as cons, I guess you asked that too.
Yeah.
I don't know that there really is any. I mean, the main one that I would say is I always just like to make sure the co-signers are aware that that's going to be on their credit, so that it can affect them.
Yes.
If, let's say, they turn around and they're like, okay, time to go get a new car because ours expired. Well, if they've got this, $2,500, $3,000 plus mortgage payment that's on their credit report now, then that could.
But does it count towards their debt to income ratio also?
I'll speak from the mortgage side of it.
Yes.
I won't speak for maybe auto lenders.
Okay.
I imagine it's similar, but just in case anything's changed there.
Yeah.
But on our end, we do have to count it against them.
Okay.
There is a rule to that though, where if maybe that loan has been been closed for 1 to 2 years or so, and we can verify that, hey, nope, this is actually, they just co-signed on this for their son or their daughter, and we can verify that that son or that daughter's been the one that's been making all the payments for that last 1 or 2 years, then we typically can exclude it.
Okay.
Yeah.
Well, that's good to know.
So not off the bat, but as time goes on.
Right. So for all of you older adults listening, parents and grandparents, you just heard that there are pros, there are cons, and then for our younger people getting into home ownership, getting away from the fluctuating price of rent, seems like every year rent goes up, and I know right now we're in a place where mortgages are more expensive than rent. 2 years ago it was the opposite.
Right.
So who
Right.
knows where we'll be in 2 years.
Yeah. I will say one thing, it's like flipped a little bit. The nice thing about now, with being that there's a little more opportunity, depending on property specific competition, but to maybe get your closing costs covered because it's less competitive, that seems to be more of a thing now that's realistic versus when rates and payments were low. That really was very, very
wasn't
difficult.
happening, but I am seeing it's easier to negotiate for closing costs if there's low competition or it's winter. So this April, May, June, July, it's kind of tough to determine whether that's the right way to go. Is that the right strategy to get the house?
Right.
Sometimes you shouldn't say things like that, but that
Right.
depends. Because
Right.
sometimes it is. I've seen
true.
houses sit on the market there's several out there right now that are on the market over 14 days.
Yeah.
Shoot, why not ask for it?
Yeah.
Is this the right thing that will make the sellers happy? Because it will make
Right.
me really happy.
Yes, you're like, that'll make me happy. I know, it's been like a really fun scenario where anytime someone has been using down payment assistance. So they get their down payment covered,
Oh my
and then they
gosh.
get a seller credit for their closing costs.
Even just partial.
It's
amazing.
Even just partial.
Yes.
I think that it's there's been a handful of times where somebody's gotten enough of a seller credit to where they really didn't have to bring anything to closing.
They just paid for the inspection. They paid for the appraisal. And that's it. Like,
yeah, it's like, oh my gosh, that was less than a first and last month's rent somewhere.
Every time. Even in this market, what I'm seeing is that the cost of first and last month's rent plus security deposit. So if you're just switching from one apartment building to another, that's almost $10,000. That's at least $6,000.
Yeah,
it's definitely $6,000. And if I can get your closing costs close to $6,000, then we're coming out good.
Yeah.
And of course, if you can afford the payment.
Yes, that's true. It's true. And then assuming you can afford the payment, at least to start, you feel comfortable with it. That's super important.
Right.
But if you do, at least you know with the mortgage, I mean, sure, certain things like property taxes, sometimes those can go up a little bit, or insurance. But so at least, for somebody that bought a home, I was actually just talking with somebody about this yesterday. It's like, hey, you guys, here's good news for you. Buying where rates are now. You'll be able to refinance as rates do come down. We don't think that they'll go back to what they were, but that was also just really abnormal and kind of artificial, the reason they were there. But people that bought back then when rates were really low, they feel kind of locked into their mortgage, because if they refinance now, their rate would more than double for some of them.
Overnight.
Whereas people that are buying now, they'll have the opportunity probably over the next 1 to 2 to 3 years to be able to actually incrementally take their payment down once or twice, which I think is what makes it really exciting, because like, hey, if you can afford and you feel comfortable with the payment now, you're going to be feeling real good in a couple of years.
Because usually what happens is from here, let's say you're 35, you've bought your first house, whatever, it doesn't really matter. You bought your first house and it's a comfortable payment. Usually from here, your earning potential goes up. Usually, from this point, you get a promotion, or you move to another industry that pays a little bit more, or you bring on this second thing, or you now have a little bit more flexibility to pursue a passion, and maybe you start a home business, or maybe you start this side gig that becomes really, really lucrative. So I think from first-time home buying, is just a secure platform to know my house payment isn't really going to change. And that's a more secure place than not knowing, is my rent going up next year? Do I have to have this margin or not? Do I have any time? Do I have any money to pursue these other things? We just don't know.
And I love to also walk first-time home buyers through kind of the snowball effect of equity, because and you started to kind of touch on that too, right? It's like when you're in that house, there's so many benefits to home ownership. One of them being the equity that you gain over time. It's just, you pull up a chart of real estate really as far as you can go back. If you look at the long-term trend, it's up and to the right, which is great. It's been pretty neat to see people that even just bought, 4 or 5 years ago, that now are getting to the point where they're starting to outgrow that first home. They're putting their home up on the market or getting ready to. And now when they sell, maybe they only had a minimum down payment of 3 or 3.5% the first time, or maybe they didn't even have that and they just used down payment assistance. But now they might have a 6-figure plus down payment on the next house because of being able to use that equity to roll into the next one, which I think is just a cool perspective, that especially if you are a first-time home buyer, you're not necessarily thinking about how as time goes on, the longer you own real estate, every time you buy a new house, your down payment on that house has the opportunity to keep on getting bigger and bigger just from the equity that you get to roll into it.
Sure is. Awesome.
Yeah.
Well, thank you so much for coming today.
Thank you.
Gosh, this was so much fun. I hope you enjoyed talking with Josh Johnson from Cross Country Mortgage. And if for some reason you're finding this in a couple of years and Josh is not at Cross Country Mortgage, you can always find him on Instagram and Facebook. Just look for Josh Johnson. He looks like this.
This is me.
This is the real him. And if you like talking to Josh, I will put his contact information in our show notes. Be sure to follow him and find a lender that you love and are comfortable with, because we are going to be your best friend for a little while. Are you still teaching home buying classes?
I do teach home buying classes on occasion now.
On
Definitely,
occasion.
we were teaching them for a while, like every month.
Yeah.
I do it more so every other month or once a quarter or so.
All right, so
but
just watch your social to
you can
see if you've got something going on.
Yeah, watch social media, or even just on my social media if you guys want, tips and little things that maybe are relevant to what's going on today in the mortgage world. I'm always trying to share things. Usually I try to put up at least 1 or 2 videos a week kind of sharing what's going on.
And if you ever hear the interest rates are going down, talk to Josh first, because he analyzes the data better than anyone else.
Thank you. Wow. Okay, thank you.
Well, you make it understandable,
Yeah,
because most of it I can't understand. So thank you for being with us. If you're looking at buying a home in Tacoma, Washington, Josh and I are Tacoma and Puyallup experts. So give us a call. All contact information is in the show notes. And this video was edited and produced by Will Robbs of Will Robbs Art. Thanks for being here.